You just know a stock is up way too much, but you're not sure how to trade this idea. You've shorted ideas like this in the past, only to get stopped out and then watch the stock trade lower later, sometimes right after you cover. Well, there's a technique, a trading technique, to take these quality ideas that you generated and turn them into professional trades which you may not be employing. This can turn your good ideas from losing trades into winning trades. In this video, a senior intern breaks down how to do this with input from me during a trade review. If you want to improve your trading, this video will help. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. In this video, you're gonna learn how to turn a good trade idea into a quality trade. You're also gonna learn how to develop a research edge, how to find an excellent risk-reward entry, how to factor the stock's float into trade decisions, how to factor the ability to borrow the name into your trading, the quality of work necessary to move from junior intern to senior intern on our desk. And as always, we hope the biggest reward from videos like this is you learn how to think through a trade like a professional trader. For those of you who want to improve your trading by improving the quality of your trading decisions, we hope this video helps. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're gonna learn more in a couple of hours from this trading workshop than from years of online education.
So this is a trade that I made a few days ago. I don't think it counts as an A+ setup. It was maybe an A- or an A setup, but I thought it was worth doing a playbook anyway. And as I go through it, I'd like you to focus on how I formed my bias and the different checks that were in my favor and the reasons I had not to add super large size. So we'll start with just some basic information about the company. It is a shipping company, kind of like Dry Ships or Tops, and all of those had a huge run in 2017. Dry Ships went from, I believe, $5 to around $100 in just a few weeks. So stocks in this sector periodically still pop up, and lots of traders chase them because they think there's going to be another major move. Also, if you looked at the filings, I noticed that the company was based in Cyprus, which is always kind of sketchy. There was very limited chart history, so there weren't many resistance levels to base the trade on.
Dry Ships went from
around 5 to 100 in, I think, a week or a week and a half.
Yeah, and then they actually had to halt it.
Yeah.
NASDAQ had to halt it or else it was going higher. I remember being on the desk at the time and it was going to 200, it looked like to me, and NASDAQ just halted it.
Did they T12 it?
I don't know.
That's probably what it was.
Yeah, I mean, it was a memorable, event.
And then it faded nonstop around a year.
So you're saying people think it's going to be the next move like that?
Right. Or if not to 100, at least maybe to 20 or 15. If we look at the company closer, you'll notice that the float was 800,000. That's basically the total supply of shares available to trade. So the lower that number is, generally the more a stock can squeeze. Anything under, I'd say 5 million can be pretty dangerous, and under 1 million can be extremely dangerous.
Yeah, and so what was the price of the stock?
I don't remember. I think it was started around $6 and went to around 13.
Yeah, so, with less than $13 million. There are plenty of guys out here who could buy the whole float.
Right.
So it doesn't take a lot to prop up the stock. And what that means is that it has more risk to being propped up, bought up, squeezed, artificially run higher.
Exactly. So when I see that a company is sketchy, my default thought is to short it. And then it's just a question of what the risk factors are. So in this case, if a lot of shorts got stuck, they started holding the price higher, maybe some algorithms got involved, then I would have thought it was quite dangerous and I would have gotten out. In this particular case, that didn't happen. So the news that drove the whole run were positive earnings. They said there was a 20% increase in revenue and a 107% increase in net income. The company neglected to share, though, that their net loss per share doubled over the same time period. So that seemed kind of like a pump job to me. I dug a little bit deeper into their financials. They had total assets of 10 million, total debt of 400,000. That's surprisingly little debt for a company that otherwise seems sketchy. However, they also have basically one asset, which is one boat. I think dry ships had quite a few more than that. So it just seems like this company almost shouldn't be listed. And I also always check for any possibility of dilution. In this case, there were not any warrants and there wasn't a shelf. It didn't seem that they could do, or that they could dilute the stock at all.
And why would that be significant if there was a possibility of dilution?
So in this case, with a tiny float of 800,000, if they had, let's say, a shelf, or if they had the ability to dilute and add another million shares to the float, they can then take those shares and sell them on the open market, which basically increases the total supply of shares and drives down the price. So this is a look at the daily chart. You can see that there were a few different examples in the past where the stock had a major squeeze and then faded the same day or on the next day. Here it went from, looks like $4 up to 18 in one day, then pulled back. Here it went from 4 up to 10-ish, peaked out the next day at around the same level and then pulled back. So over here, when it was gapping up in the morning, I was trying to find resistance levels to base the short off of, and the only thing that was relevant was really up here at this 18 level. Okay. So now we're going to look at how I determined my bias and how I decided how much size to take on the short. Things that supported my short thesis were that they tried to hide their loss. They were based in Cyprus. They only had one boat under management. As we saw, the stock tends to fade the same day that it runs. And I also learned online that it was very, very difficult for retail traders to borrow. It was also fairly difficult for us to borrow here. And when that happens, there can't be a short squeeze, or the probability of a short squeeze is a lot lower because there's no shorts to squeeze out.
Yeah, I thought that was, you mentioned that in the AM meeting when we were teeing up this idea. And I thought that was a really important observation that you made. Because at the end of the day, this is a game of supply and demand. And so when there is a really high short interest, that can bring out, as the stock goes higher, that can bring out people who are going to cover, in this case buy. That can bring out more buyers.
Okay. So these were all the factors that were in my favor, and then there were some things that made me slightly reluctant to take large size. First, as we saw, they didn't have a lot of debt. The float was tiny. There was no potential for dilution. If they could dilute, then I would definitely size larger. And also, just in terms of the overall market, there had been quite a few low float squeezes in the same week, and things were running up a lot more than they should have. Like we saw SOLY and some other stocks like that. So my conclusion from all of this was to have a short bias and short until I was proven wrong by price action, which would have been the stock holding at a higher level. This is the full intraday chart, starting in pre-market. You can see that it gapped up all the way to around 10, then it pulled back, started to squeeze out a little more. And in here, what I noticed is that it felt very heavy in terms of longs being stuck. If shorts are stuck, what you see is when the stock sells off lower into a certain level, it tends to bounce back off of it really fast as shorts try to cover. And here there just wasn't that kind of volume. So I saw this level here, then I saw it hit it again over here, and I decided to take a teeny bit short in pre-market, risking off of this level. It ended up not fading in pre-market. Initially, my stop in pre-market would have been...
I just want to clarify one thing. And so there are interns in here who are not as experienced as you. And so when you use the term heavy, when you use the term heaviness, that means that we expect that the stock should go up higher, faster than it is. And we see this heaviness, that means that to us, that's a check in our favor that it's more likely to go down.
Right, and often what you'll see, or what I think determines if something is heavy, is if there is an unusually large number of bids, or of orders hitting the bid. You see a lot of red prints, and the rate at which they're printing is abnormally high.
I want to point that out, and that's another good reading the tape technique, observation. The velocity at which the volume is being done is a signal for us whether something is strong or weak. So we talk about volume, and that is an indicator of strength or weakness, but velocity is also a really important indicator as well.
As I described, I took a small position in here. My initial stop was at this area, just for pre-market, because in the off chance that they squeezed it, I didn't want to get stuck holding a position like $1 or $2 against me. So I would have stopped out here. Then, since I didn't get stopped out and I knew there would be increased volatility and range off the open, I adjusted my risk level to the pre-market high. What tends to happen on these is they'll pop in the first minute or two as some longs just chase the stock who couldn't trade in pre-market, and they often reject after that.
Can we just go back? I want to make a really important point. Can you go back 2 slides?
2 slides, sure.
And so in your conclusion, which I'm going to just term your thesis, so you've developed a thesis which is the stock should trade lower, and you say, I have a short bias until proven wrong by price action. 2 slides forward, please. And now what I'm hearing you say is, you haven't been short yet. You have a short thesis. Now you're starting to see some heaviness on the tape. And now after seeing that, you're putting your short on. Did I hear you correctly?
Yes.
And I think this is so that's a very different thing. Go back 2 slides. Because this is a difference between elite trading and people who are never going to trade for a living. This is a difference between scalable trading and people who are going to be hit and miss for a living. And it's a huge, and I coach some really professional traders outside of the firm at the highest levels, and we talk about this. You know, there are traders that work at really, really big shops, big places, and I will say to them, and they have all this research, and they have all this infrastructure, and they have access to order flow, and even to them, they're used to thinking that they need to get out in front of an idea, that they have to be the one who gets in first. And you know, we talk about, do you really need to do that with your trading? And is it better for you to wait to sort of see that your thesis is being confirmed, even though you work at this, amazing shop with all this information? And I'm sure there are traders out there that have a clear news edge and will be first in. I'm sure that that's true. I would say that those people have enormous resources, best in the world, access to order flow that only they have, that we're not going to have, that you're not going to have. And I still think those are a small number of traders. And even these really prestigious traders at great spots that I coach, we often tend to find that their best trades come after confirmation. So they have these sophisticated theses, they develop them, but then when they add seeing it from the tape, and this is across product, and this is across the world. This is not just U.S. equities, it's not just stocks. When they add seeing it, when they add their confirmation, that puts them in better trades. And so if I were to read your conclusion right there, short bias until proven wrong by price action, if I were to read that literally, I would have thought you're just going to put it out short just on the basis of a news edge, which you do have actually. You do have a news edge in this. But a superior trade, a scalable trade, a more consistent trade, one where you can trade with a lot more size, is one where you develop that good thesis where you have some edge, and then you see it on the tape and put on a trade. So I always talk about thesis plus setup in your playbook, lower high, plus see it, heaviness on the tape, plus fight for price, get in at a good price, equals a good trade. And you did that there. That's a professional trade. That's a scalable trade. That's a superior trade than just having an opinion.
Especially on these low floats, it's incredibly dangerous to just short blindly. As Mike said, you really have to find a clear area to risk off of. And it has to be worth taking the trade, because a lot of the time if this goes against you, especially with slippage, you're not going to be able to get a cover at a good price. Okay, so I would have added more size on this if I saw it pop higher into the 10 area. But this reject happened very quickly, and the tape also wasn't as heavy up here as I would have liked. So at this point, I wasn't extremely confident that it would start to fade. Because of that, I just kept my small position size. It started to pull back. It consolidated for a little bit, then started to push up closer to the area of the open. And immediately after that, it had a massive sell candle on volume. You can see this volume increase. And after a few more sell candles, when I felt like it was starting to get a little bit overextended, I decided to take off a piece. So I took off, I believe, a half over here. And then my plan was to swing the other half down to 650. And just an hour or half an hour later, it broke yet again after a very, very shallow pullback. And this area was important because if the stock were strong, it would have seen a much larger bounce. But this really couldn't bounce at all. It just held all the way at the bottom of the range before continuing to sell. So if I had the ability to short more, I would have. This would have been an excellent place to add or even double or triple my size, just risking off of the top of this consolidation. But since I couldn't locate it, I ended up just covering the entire original position down here. So just to summarize this trade, there was never a point during the day when buyers regained control. As I just mentioned, all of the consolidation periods were fairly shallow, and it didn't seem like anyone was buying the stock. It just seemed like the volume totally died and no one was selling, which is why it was holding up. I could have traded this better by increasing my size. Part of the issue was that I didn't have borrows on it, so I couldn't.
I do want to sort of say one thing about that phrase you used. You saw it kind of dying. When something starts the backside of a trade, that is a pattern that you will see in something that is on the backside. You know, you have this euphoria, you have these large up moves, it rolls over, it puts the backside in, it puts a deep red candle in, it puts a kill candle in, it breaks VWAP for the day, it breaks 2-day VWAP, it's not bouncing very much. And then all those buyers that you remember in your head seeing on the way up are just gone, and it really does look like it's just not moving. It is really dying is a great way that we describe it. It's just so different than what it looked like into the up move. And so that's a good thought to have in your head. All right, and so questions on this trade?
Yeah, go ahead.
Yes. When you said that it would have bounced back a lot more if it was a stronger stock,
In
what
here?
would you have considered a strong bounce back?
So VWAP is not on this chart. It really depends. A super strong bounce would be up to this area.
Okay.
If it bounced to there, I wouldn't. It depends on where VWAP is. Generally, if something pulls way below VWAP and then bounces into VWAP and they're selling there, I'll put on another short. I really like that setup.
Okay.
If it bounced into this region and started to hold above here, and that was above VWAP, I might put on a little bit of size, but if it held up there for too long, I would take it off.
Gotcha.
That to me would signal that someone was stuck and that it could potentially go higher.
Other questions?
Your research in this was fantastic. It probably gave you the biggest part of your edge. How'd you find out that they only have one ship?
So I just read through all the information in their filings.
That's very thorough.
And you can do searches for keywords to see if they have dilution, which makes it a lot faster. Yeah.
Is that kind of research something you do for a lot of your trades, or like what made you go that deep?
So anytime I see that a low float is gapping up a lot, I want to figure out why. Generally, the press releases are fairly deceptive, and the real information is in the filings. So a company will often put out a press release just so they can do an offering at a higher price and then sell it off.
You say yesterday's close was somewhere around around like $6 or something like that. So at 10 a.m. we're already back at 650.
So around here?
Yeah. So when we're already at 650 by around 10 a.m. Are you mainly just moving on from this? Or do you
Yes,
still have
absolutely.
business? Yeah.
Yeah. This ended up fading even more, actually. But once something gets this extended and sells off this much, I just don't think the risk reward is there to take a large position.
All right, now I'll finish with this. So Joseph, for the junior guys, for the junior interns in the room, so Joseph was you last year, and now Houston and him are senior interns. This is an example of the work that you're expected to do. If you would like to impress us so that you one day can become a senior trader, this is the type of work that you need to do. You need to be thinking about how you're going to develop a real edge. This is an example of a research edge on top of price action edge. You're going to have to figure out what your edge is going to be, and when you come in here and you present your playbook, which you all will do before you leave, if you don't have that edge and you don't have the thoroughness of a review like this, my feedback is not going to go well for you. The critical feedback is going to be critical. Joseph, I see you shaking your head. You've been in the room where some of that is taking, I'm sorry, Houston, where some of that's taking place. It's not going to go well. It shouldn't go well. So this is a good example of the type of work that you want to be doing and you're expected to do. Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. from all of us at SMB. Train and trade well.